All right, so again, overview for tonight. My background, what is active trading, the concept of it, what is strategy trading. I will walk you through the day trading process. I will show you how I create my day trading watch lists. I will also walk you through the swing trading process, and we'll talk about education in the November training, and then I'll show you the trades I made today and a summary of the trades I made today. This is an image I captured from my trading platform. I didn't trade the whole day. I had to do something which I'll talk about later, but yeah, an okay day. $1,781 before commissions. I think it was about $1,650 after, and you can see I did trades on 8 different stocks or ETFs. So I will show those at the end of the presentation. All right, what is my background? I've been trading for 25, 26 years now, and started when I was 19 and was relatively broke, I guess. I had $3,000, and as I went through university, I built that $3,000 into $30,000. When I came out of university, didn't want to get a real job, I guess, or maybe I couldn't get a real job, and I took that $30,000 and turned it into $500,000 in 3 months, and that sort of got my trading career going. I built Stockscores about 15 years ago, 16 years ago now, 1999 I built Stockscores. And that has my proprietary tools and indicators. I also have created proprietary indicators for a software program called TradeStation, which I will show you later tonight. Great tool for day traders, swing traders. Not necessary, but it certainly is a powerful tool that I think you can use to make more money. Nothing to do with me. It allows me to write my own indicators, and I'll show you those later on. What I love about trading is that you can do it from anywhere. That has an internet connection. You can travel, you can work from home, that sort of thing. It really gives you a lot of freedom once you learn how to do it, and the income potential is fantastic for those that figure out how to make money trading. Most people that try to trade, I would say 95%, if not higher, lose money, and I think that's because there's very little barrier to entry into trading. Anyone can open a brokerage account, but it's a different story that you actually know what you're doing. And so one of the things that I do is teach people how I trade my way, and I will talk about that tonight as well. My philosophy is that if you do what everyone else is doing, you'll get what everyone else gets, and if you do what everyone is doing, you're basically going to be average. So I don't want to be average, I want to beat average, and so I don't really use common techniques. I've read very few books about the stock market. I have my own method, and it's self-taught. I figured it out. I didn't copy someone else, or I didn't really have a mentor through this. I just studied the market for 25 years. I was thinking today that I saw some tweet on Twitter about how it takes 10,000 hours to be good at something. I've probably spent 20,000 hours at least, probably more than that, analyzing the market. So I can save you a lot of that time because I've developed these programs to teach people, but you got to expect that it takes time to learn, and I certainly put in that time. So what is my active trading concept? Basically what I do is I focus on very liquid stocks when I'm trading. If I'm swing trading, those are stocks trading at least a couple thousand times a day. With Canadian, I can lower that to maybe 500 because the Canadian market is kind of different how orders get filled. In Canada, we don't have so much of the algorithmic trading in Canada. We do have some, but it's not as big a force as it is in the U.S. But on the U.S. market, I want to see stocks, as I said, if I'm swing trading at least 2,000 times a day. That's not volume, that's number of trades per day. And then for day trading, at least 15,000 trades per day. And one of my strategies, I really only focus on the 100 most active stocks that trade in the U.S. market. So I'm very focused on liquid stocks. And the reason I do that is because the message of the market is more accurate, I guess, the more a stock trades. If you have a lot more people voting in the market with their trading action, then the message of the market is going to be truer. If you're trading a stock that trades 30 or 40,000 times a day, you're really only, 300, 400 times a day, 200 times a day, you're looking at a much smaller group of investors who are buying and selling that stock. When I look at, for example, General Electric was the most active stock in the market today. It traded, I think, almost 500,000 times today. So it's just so many people voting, and that means the message of the market is more accurate. And I'm really basing my trading decisions on what the market is telling me. So the market speaks a language, and I can sort of teach people how to understand that language. And what I'll talk about tonight is a little bit about how I do that. If you took in the presentation last week on Thursday, that presentation kind of got more into how you read the market's language, at least partially. And we'll elaborate on last week's webinar tonight by looking at some of those concepts in terms of actually day and swing trading. So I like to either take advantage of breakdowns in market efficiency. Market efficiency assumes that investors are rational, and it assumes that investors are using the same information as everyone else. The reality is there are some investors in the market that have better information than others, and there are always going to be investors trading with emotion in the market, and those things create opportunity. So many of my strategies leverage that concept, either taking advantage of some people that know more than others and the trail that they leave for us to follow when we're trading, or just taking advantage of emotion in the market. I like to trade changing momentum. I have a day trading strategy where I'm all about looking for changes in the momentum of the market. And I'm really just looking for situations where there is a strong reward for risk trade-off. In other words, if I can risk $1,000 to make $3,000, that's the kind of trade I want to make. I'm not interested in risking $1,000 to make $200. Now, sometimes it happens, but I want trades where the upside potential for me is greater than the risk. And I don't expect to be right all the time. You saw from my trades that I posted earlier, I had some losers today. I have losers every day. I haven't had a day where I didn't have any losers in a very long time. Losing is part of making money, but the best traders are those that understand how to balance risk and reward, and how to have a few small losers and bigger winners. And you'll see when I go through my trades from today at the end of this presentation that my winners were typically 2 times the size of my losers. And that's the critical thing, is you have to have your winners bigger than your losers. All right. So what is strategy trading? I said earlier that I am a strategy trader. What does that mean? Essentially, I don't trade on rumors. I don't trade on what I know about a company. I don't trade on fundamentals at all. I trade on market action. And what I have done is devised a set of rules for when to buy, when to sell. Sometimes it's when to short and when to cover. So I will short sell stocks as well. And I also have rules for risk management. And I simply follow rules. And what that means is that I am trading almost like a robot. I watch a list of stocks, and when they meet my criteria, I act. And it also means that you can evaluate a strategy to see how well it does over time. I don't know if I'm going to make money on my next trade. I have no idea. What I do know, if history repeats itself, I will make money if I do 10 trades, 30 trades, 50 trades, because I have strategies that have, at least historically, have positive expected value. So what that means is that if I do them over and over again, I expect to make money. It's sort of like being a casino in Las Vegas. The casinos in Las Vegas don't know who is going to win or lose on the next hand of blackjack, right? I mean, it's a kind of a random game. But they do know that if they deal 1,000 hands of blackjack, they will make money because the odds are in their favor. And that's how I approach trading. I am the casino in the market. I am not the gambler. I am the person who has the odds in their favor. Most people approach the market like the gambler. They're guessing and they're hoping. And the result is sometimes they win, sometimes they lose. But over the long run, they actually lose because the odds are against them. So when I talk about strategy trading, I've devised a set of rules that I have tested, and I can establish whether those rules work or not. And one of the ways we do that is we will do a test. So I did a test back in April of one of my strategies, something called an intraday pullback play. And I just went through all the trades that occurred over the course of, I think it was 2 or 3 weeks, maybe a month, I can't recall exactly, but it was a large number of trades. I would say 60 or 70. And I didn't track them with the benefit of hindsight. I tracked them as each day occurred. So each day it would occur and I would say, okay, these are the trades from today that met the rules of that particular strategy. Some won, some lost. And I measured how well they did simply by following the rules. And if I was perfect, if I had followed the rules exactly, this is how I would have grown my profits over that test period. And again, this was, I think, a 3 or 4 week period. And you can see as a curve, it generally goes up from left to right. So it started the first day, there was maybe $3,000 of profit. And then as you know, the first 20 trades or so, now it's at 20,000. And over the course of the test period, you can see it consistently rose. But there were times, like right here, where you actually had a little bit of a downward trend. So for perhaps a few days, the strategy lost money. And here for a few days, the strategy kind of just broke even. But then you get a strong period here where for maybe 15 or 20 trades, you consistently made money. And that's normal. With strategy trading, you know, the market has an impact. And sometimes the market is great and sometimes it's not great. And you will go through periods where you suffer losses and you'll go through periods where you have really strong gains. What you want to see when you look at an equity curve is that it consistently moves up over time, that you don't have wild fluctuations. Because wild fluctuations are frustrating, they drive people crazy, and they really hurt confidence. So as linear a curve as you can get, the better, because that just shows that it works. Okay, so moving along, I'm going to just talk a little bit about my day trading process. So the way I day trade, and we'll talk about swing trading in a moment, the way I day trade is, my first step is I create a watch list for each of my strategies. So if I'm doing my intraday pullback play strategy, I have a process, which I'll show you in a moment, of how I build my watch list. And then I get the computer to monitor that watch list for potential signals. And when there is an alert, an alarm that sounds, I take a look at that stock and determine whether it meets all of my criteria. My strategies are about 80% computer driven and about 20% human driven. So my final call is I have to look at the chart and see if it has the right pattern. Now it is possible to program patterns into a computer, but I haven't figured out how to do that. And I still like to use my judgment as the final step. I'm not quite ready just to let the computer do everything. Maybe I should, but quite frankly, I enjoy trading, so maybe that's why. But I let the computer do 80% of the work, and the last part is something that where I make the final decision. So when you walk through this process with me in a moment, you'll see what I mean. So here's an example. I traded Amazon yesterday. So this is yesterday's chart. At the green arrow, I got an alert. And it was actually, alert came just before that, but I was watching it through that green arrow. And the green arrow was the actual point when it met my rules for this particular strategy. And I bought Amazon on a strategy called a wave strategy, which is actually a new strategy for me. It's something I've been testing for a couple of months, and I've been trading a relatively short time period. And so I bought Amazon yesterday. Now, the horizontal lines that you see at the chart are what I call my reward for risk lines. Remember earlier I talked about reward for risk being an important component of how I determine whether I should take a trade or not. So the blue line is my entry price. So I bought Amazon at 628.33. I might have been a little bit different than that. These are where I drew the lines, but I probably got filled slightly different than that. And my stop loss was at the inflection point low. So you'll remember from last week's presentation that I talked about inflection points. And if you missed last week's webinar, go to my YouTube channel. Just do a search on YouTube for Stockscores, and you can find my YouTube channel. And I posted last week's webinar up there. So if you didn't get a chance to participate in last week's webinar, it is on YouTube, and you can watch that. So anyway, I put my stop at the inflection point low, which was the concept we talked about last week, at 332. That's where the stock stopped going down and started going up before my entry point. Now, each one of these green lines as you go up is a reward for risk line. It is a multiple of risk. So If my risk per share was $3.32, then my reward at this line was $3.32 per share. At this line, $3.32 more per share, so $6.64. So if I bought 100 shares, I was risking $332, and at the first line I was making $332, second line making $664, third line just under $1,000, fourth line a little better than $1,300, $1,600, $1,900. You get the idea. So that's the reward for risk line. So at the very end of the day, this is the close over here. You can see 4 o'clock down here. So the end of the day, that trade was up just under 6-to-1 reward for risk. Now I didn't hold it till the end of the day, but I still had a nice profit on the trade. But if you just simply bought at the green arrow and held until the end of the day, for every $1,000 you risked, you made just about $6,000. All right, so that's how I judge my trades. I don't judge them on the dollar I made, on the total dollar profit. I judge them on the reward for risk that I earned. So you'll often hear me say I made 4 RR on that trade, or 3 RR. What I mean is I made 3 times my risk, 4 times my risk. And the only other question is how much you risk. When you start trading, I encourage my students to risk nothing, just paper trade. And once you've built up your confidence and your skill from paper trading, then you can start trading with real money, and maybe you start at $100 of risk and you build up some confidence and some success. Now you increase your risk to 200, and you slowly increase your risk over time. Okay. Now those risk reward lines that are on there are something that you can draw in Stockscores. If you go to the Stockscores charts, you'll find, as long as you've got the chart up, if you got the large chart up, there's a little tab below the chart called the charting tab. And if you go into the charting tab, you can enter in the entry price and the stop loss price and hit create chart, and it will plot those lines for you. Now, if you're on the small charts on Stockscores, then the charting tab is beside the chart. I recommend you use the large charts because it's easier to see. And I may as well just show you this. Let me just jump into Stockscores here and show you exactly how you do that. So here's a large chart, and if I go into the chart tab, I have all these controls here. The first thing you want to do is make sure that you are on the quick chart. Don't use the interactive chart. They actually don't work very well, and I'm working on a replacement for them. So I want everyone to use the quick charts until I get the new interactive charts up. My programmers found one. He's just having a little problem getting the Stockscores to work in it. So anyway, you'll see down there risk reward. So if I enter a risk reward entry price of $30 with a $29 stop and click on create chart, you will see that there are now lines on there. Okay, so where you put the lines depends upon where you bought and where your stop is, that sort of thing. So that's how you can do that on Stockscores. All right, now the second thing, and I'll show you this in a moment, that we have to do is, in addition to the process, we have to build a watch list. So we build a watch list, and then we monitor the watch list for entry signals. Every one of my strategies has a process for building the watch list. And some of those processes are really easy. Some of them you can do on the Stockscores website. Some of them you do with TradeStation or another charting program that you use. But I want to take the 14,000 stocks that trade out there and whittle it down to a manageable list. So for one of my strategies today, I was only monitoring maybe 10 stocks. For another one of my strategies, I had the computer monitoring 50 stocks. And I just wait for alerts. And when an alert sounds, I take a look at the chart and I take the trade. So before we get into swing trading, let me just walk you through that process. So I'm going to focus on 2 of my day trading strategies for this particular section. I'm going to show you the process for building a watch list for my intraday pullback play strategy and give you a little clue into what all these dots mean on the chart. And then I'm going to show you the process for my wave strategy, which is both are pretty simple. So with this particular program that I have, which is called TradeStation, I have this scan set up. The settings for the scan are something I teach in my class, but I'm going to run the scan. So we'll just run the scan. Now I would do this maybe 10 minutes after the market opens, maybe even sooner. And I grab all the stocks that are found by the scan and I paste them into this window here, which calculates number of trades. Now I compare the number of trades with what I call the threshold number of trades, and I want to make sure it's above the threshold. So this threshold is changing throughout the day. So if it's 9:40 Eastern time, this threshold might be 700. Well, at that point, I would say, okay, I'll grab all the stocks that have traded at least 700 times. Well, you can see right now the threshold, because the market's closed now, is 15,000, because the requirements of this strategy is that the stock trade 15,000 times during the day. So I can grab all the stocks that traded at least 15,000 times, copy them, and paste them into this window where it will now calculate whether the volume of stock traded on that particular symbol is abnormal. You can see here I've got this indicator called volume. Now this is my own indicator. It's something I created. I wrote the math for it. I had some programmers program it for me. And it's how I determine whether a stock should be traded or not. All right, so the stock has to be above a certain threshold, and that threshold is changing throughout the day. So one of the stocks that was on my list early today was Walmart, and it was trading abnormal volume. I don't know if they had earnings or what happened, but some news came out, I would assume anyway, because the stock gapped up. So with this particular strategy, I want to see abnormal behavior. I want to see a stock trading with abnormal volume, and it's all using this indicator that I wrote, which is my Tyler's abnormal volume indicator. Once a stock is trading abnormal volume, then I monitor it for an entry signal. This stock just came alive with abnormal volume in the middle of the day. You can see it really bumped up in volume just before 12:30. So there's probably a rumor that hit the market. It looks to me like the stock got halted. So it came alive with abnormal behavior. You can see there's some pink dots on here. That's a signal of abnormal behavior. And that's what I'm looking for. I'm looking for abnormal volume. And the reason I say it got halted is because look at this huge price gap that occurred at a little after 1 o'clock. So I'll bet you that the time, 1:12 was when it was halted, and it resumed trading at 2:36. So my guess is someone's trying to buy them. I'd have to look at the news, but just looking at the chart and how it goes, there was probably a rumor that came out that said, oh, Airgas is going to be bought. And so they halted the stock because they realized the market was trading on the information before it was made public. And then when it came back on, the news was announced. That's my guess of what happened. So remember I said earlier that there's always some people that have better information than others? Well, there's your proof right there. There were some people that got a rumor that said ARG has got some great news. I don't know what it was. And sure enough, the news came out up here and the stock, made a huge price gap. That doesn't happen very often, by the way, but it happened today on that stock, so that's kind of interesting. This is a stock that's been abnormal for a couple of days, KBIO, and once a stock starts behaving abnormally, and this looks a little more obvious when I do this. Let me just show you this. So see how this is a 30-minute chart now? See how the volume really picked up yesterday? You can see the volume. This is yesterday right here. This is a 30-minute chart. This is today. So the volume really bumped up yesterday, and that was a sign that the stock was in play. So this particular strategy looks for that, and then it uses these blue dots to determine entry points. And if I see a blue dot, I evaluate the chart. If it has the right pattern, then I will buy it. And this one was okay. I can't say I loved it today because it was the second day of the run. I prefer to trade the first day, and so I didn't buy this one today, but I did buy Walmart. So looking at Walmart again, and we'll go over this later, but I bought Walmart right here because it met the criteria of my rules. There was a blue dot. I actually waited for a little pattern set up after the blue dot, and it did pretty well, and I sold Walmart right about here. So just off the highs, ended up being a pretty sweet trade, and I'll summarize those at the end of the presentation. So the other strategy I have is called a wave strategy, and again, I have a scan. I grab all the stocks that the scan finds. I usually like to follow the top 50, and I paste them into this window, and then I wait for a different alert. So you can see here I've got a wave up and a wave down signal. So this particular strategy, I buy and I short sell. So short selling is how you make money from stocks going down. And when an alert comes, it'll ring a little bell in my ear. I wear headphones when I'm trading, and so I'm listening to the bells ringing, and when one sounds, I will take a look at the chart and determine if it has the right pattern. So I'm looking for blue dots and yellow dots on this chart. So in this case, there's a yellow dot here, a blue dot here. The only yellow dot that mattered was this one, and the entry signal came a little later. This one I missed. It's easy to miss signals. You have so much going on through the day that could have missed many. I missed this one, and it was a good short. Went down nicely. It went down 1, 2, 3, 4 times risk. And if you held until the close, it went down 3.5 times risk. So if you risked $500, it made 3.5 times 500, which is what, $1,750. All right. So that's the process. I've built these indicators to put the dots on the chart. Again, 80% of what I do, the computer does for me. It will ring the bells when the stock has a certain signal. And once a bell rings, then I evaluate the chart to see if it has a valid entry point. Here is a valid entry on Apple. See, there's a little yellow dot there. Again, I didn't trade this one today, but it was a valid signal. Short it there, stop there. And this one might have just only been a break even using my exit strategy. Oh, I might have drawn these lines a bit wrong here. Yeah, I probably would have been stopped out of this for a break even on Apple. So it wasn't a great setup. All right, so that is the process that I use for day trading. Now let's talk a little bit about swing trading. So day trading is an all-day thing. You sit there, you don't have to do it all day. I quit early because I had to go to my son's school, but normally I would trade all day. And you're pretty focused on what's going on every day. Swing trading doesn't take as much time. You can find most of the entry trade signals for swing trading in the first hour, hour and a half of the day. So for someone who maybe has other things they do, whether they go to a job or they have life, they like to go out and do things, swing trading is a little better. I like to day trade. I like sitting in front of the screen all day, so it's something I'm happy to do, but it's not for everyone. So if you don't want to put that much time in, swing trading is maybe more appropriate. So one of the things I've developed in my swing trading is something called an action candle. So I look for action candles on stocks that meet my or that ring a bell. So let's just go back to TradeStation here, and I'm going to go into my 30 action, which is my swing trading screen, and it's a very similar process. I grab a list of stocks, and I would run the scan, and I grab all the symbols. I paste them into this window, and I'm not going to do that now because it takes a couple minutes to update. So I did this just before I started the presentation, just so I could show you this without having to wait a long time. So here's all the stocks that had action candles on the opening candle of the day. So you'll see when I pull these up, they'll have little pink dots. So see, there's a pink dot right there. And if I go to the next one, there's a pink dot. And I go to the next one. So they all had a pink dot on the opening candle of the day. Now, if I go to this one, these are the stocks that had a pink dot on the second candle of the day. So if I go to this stock here, you'll see that the second candle, it's hard to tell, but that is the second 30-minute candle of the day. There was the opening candle, and the second one right there, you can see the pink dot. So again, going through, this one had an action candle in the first and the second, which is what we love, because we buy the first one and profit through the second. And I can see which stocks had an action candle at the very end of the day. Here's Groupon, very end of the day. There's a pink dot, and that's the current action candle. All right. So I don't buy stocks simply because they have a pink dot on the candle. It's a signal. It's an alert. It's the computer doing most of the work for me. But then I have to evaluate the pattern. So I'll show you a couple from the recent past. So here's Angie's list. I think there's a rumor of the stock being bought by another company or possible. I think they changed the management. I don't know. Something's going on with Angie's list. So you see the pink dot there on the open? Well, that was a situation where it had the right pattern. So if you think back to Thursday's webinar, I talked about, breaks through resistance, break of the trend line, just drew that there, breaks from optimism, rising bottoms, drew that there, there's rising bottoms, and there's the abnormal activity that I talked about last week as being so important. So it's a pink dot from the right kind of chart pattern. And I teach a dozen different patterns roughly for people to look at. And when I see a pattern I like, then I make the trade. So then I draw my risk-reward lines on here. Now the risk-reward lines I'm drawing, I've noticed somebody just asked me the question, how do you draw risk-reward lines in TradeStation? I've modified the Fibonacci tool to make it draw risk-reward lines, and I have a video on how to do that. It's one of the videos in the Active Trader course explains how to make your lines like that. All right, so Angie's List, entry signal there in the opening half an hour. For 2 days, the stock didn't do anything. On the third day, nice big gap up, and it hasn't given an exit signal yet. It's still a hold. So currently, it is up 6.5 times risk. So with $1,000 risk, it's up a little better than $6,500. Okay, so same concept as day trading. It just plays out over a longer period of time, and you don't have to put as much time into it because it's a slower trend with these things. I'll show you one more example from the last week or so. So here is another one. There's your pink dot. There's a predictive chart pattern. That's called an ascending triangle. And just in terms of risk reward, we would draw our lines like this. So that one is up 3.5 times risk. 1, 2, 3.5 times risk right now. And it hasn't given an exit signal on the exit strategy we have for this particular strategy, which is called the simple swing strategy. All right, so how do you learn all this? Well, what I did is I developed and tested my own strategy. So I spent 8 years and a lot of expensive lessons before I was successful, and I'm still developing strategies. You know, I was saying earlier that I just started trading a new strategy, a day trading strategy called the Wave, and I just shared that with all of my active trader students from anyone who took my course since I started teaching. And that particular strategy, I spent 2 or 3 months developing. And I was calculating today, I probably lost about $20,000 of real money testing that strategy. So as I was refining the rules, I would think, okay, these rules are great, and I would go start trading it, and then I'd lose $6 grand. And I said, well, obviously I got to fix my rules. So I'd go back on the drawing board and have to evaluate the rules, change them a little bit. Then when I was satisfied that the changes were good, I'd start trading again and, lose another $5 grand. So in the process of developing the strategy, I lost probably $20,000 and spent 2 to 3 months of my time working on it. In fact, I would say even longer, because I actually started on this concept of a wave strategy probably a year and a half ago. And it was just never something I was getting quite right. So I kind of dropped it for a while, and then I started testing it again this past summer. And now it's working great. I'm really happy with how it's performing. And so I finally, after all this time of testing and losing money on it, I'm now making money on it, and I have shared that strategy with my students. So you can go through that process, and I think it's fun to develop strategies, but it takes a lot of experience and a lot of time, and you got to be pretty good with the computer and that sort of thing. The other way is to have someone like me teach you my strategies. So there's different people out there. Most of them are charlatans, and there's a few good ones out there who actually teach good stuff. And I think I fall into the latter group because I trade every day. I do what I teach, and you can purchase one of my courses and learn from my experience and the time that I've spent in doing that. So I've been teaching for about 15 years. I've developed a pretty in-depth but relatively simple training program that has, I guess, 3 steps. Step 1 is learn the very basic stuff, which is taught in my book, The Mindless Investor. And step 2 is review the foundation material, which gives you the theoretical base for my strategies. And then the final step is learn my rules. So when I talk about the wave strategy, what are the 5 or 6 rules that I use for buying, for shorting, and for exiting those trades, and for doing my risk management? So those are taught in the actual strategy. So this isn't any more advanced than this. This, the Active Trader course just requires that you understand the foundation first. The foundation is the theory, and the Active Trader part is the rules and the processes. So when you learn the Active Trader, you're learning the step-by-step process as well as the rules. For those who want to be more of an investor, then we have the investor course. That's what Thursday's webinar will be on, this coming Thursday. So tonight I'm going to focus on Active Trader. So all of this is built in the Stockscores Education Center. We have modules in the foundation. We have a module that has a written component, a video, an assignment, and a test. So I'll just jump over here and go to education and go to foundation. And there you can see how it looks. So if you are one of my students, you log in, and if you want to learn predictive chart patterns, you click on lesson, and there it is explaining the concept. You can then watch a video, and these videos stream to whatever device you're using. You can be on, an iPad, a computer, a phone, wherever. As long as you can watch videos on your device, you need an internet connection, I guess, then you can watch those. And then we have an assignment. So here's an assignment for you to practice the skills of that particular module. And then finally, we have a multiple choice test where you can determine whether you understand the concepts that are taught in that module. Okay, so that's the foundation. Now, once you are good at the foundation material, then you can start applying them with the strategies. So if you're an active trader student, you want to learn the wave strategy, you would click on that lesson, watch that video, and you get all the rules step by step. If you want to know how to set up TradeStation, how to use TradeStation, I've got a video for that. There's the whole written document. It's pretty in depth in terms of how to use that software, plus there's a video. So there's a video on TradeStation basics. If you are actually running my processes, you want to know how to exit, we've got an exit strategy video there. And that's, for both courses, you have all that stuff in there. And I add new strategies from time to time. So the Stockscores wave was just added last week as a brand new day trading strategy. As I said, I've been working on it for some time. Satisfied with how it works, so I've now shared it with all of my active trader students. Okay, so how do you become a Stockscores investor? Well, you take the Stockscores investor course, and that will focus you in on position trading. So that's decisions that are typically made at the end of the day or at the end of the week. It's how you manage your retirement portfolio. If you do the investor training, then you start with the foundation courses, you focus on the strategies, you have access to my market scan tool. So if we go back into Stockscores, and I showed this on Thursday, but I'll quickly show it again. So in the market scan tool, you can select the strategy. So I could do Abnormal Breaks Canada and run the report. And there's one stock only that met the requirements of that strategy. I evaluate the chart, don't like the chart pattern. So I would then go to the market scan and run a different scan. I might do Abnormal Breaks US, run that scan. Okay, I've got 13 stocks to look at. And it's just a great powerful time-saving tool to look for the stocks that meet the requirements of my strategy. And when I see something I like, I can blow it up. I can say, yeah, that's a pretty good pattern, so I think that stock deserves to be bought today as a position trade. And it's a pretty good position trade. Let me just take a look at the longer-term chart here to see if it... Yeah, I like that as a position trade. I would rate it a 7 out of 10. It's already been going up for a while. That's why I won't rate it higher, but it's a pretty decent position trade, GLOB. So how did I find it? It took me 20 seconds using the market scan tool. All of my students get email support from me. And this is something I didn't mention on Thursday, but you get access to that tool for free for 6 months. And then after 6 months, you can renew your membership to Stockscores for $300 per year. So you will always have access to the videos and the education material in the Education Center. However, to use the tool, it costs you $300 a year. And that really just covers our cost for data feeds, keeping the website up, that sort of thing. So we charge a small fee per year for my students to continue to access the tool. Now, if you want to be a Stockscores active trader, then you do the active trader course. Same concepts, online. You go through the material in the Education Center. And the one difference, the big difference, is that you get my indicators for TradeStation. So just going back to TradeStation, all these little dots that you see and these indicators here, I send you a package of indicators so that if you subscribe to TradeStation, and again, TradeStation has nothing to do with me. It's actually a brokerage in the US, but they will let you subscribe to that platform. It costs my students about $300 a month. If you're an American, you can open an account with them and get TradeStation for free. Canadians can't have a brokerage account with an American broker, so we're at a bit of a disadvantage in that we have to actually subscribe to TradeStation. And it costs my students about $300 a month. I get them a $100 discount because I have a lot of students on this. But once you have TradeStation and my indicators, well, then you're going to get all those little dots, and you'll understand what they mean when you take the course. And you're going to get these indicators like the wave up, wave down, the action candle indicator. We have something called a message candle. These are all indicators for different strategies. So that's a big difference in what you get with the active trader. And just in the programming time, it cost me, I think, over $2,000 in, probably more than that, in programming fees to get those indicators built, not to mention all my time developing those over the last 15 years or so. So active trader, access to the foundation course, you get access to the investor stuff as well. Plus you get access to the active trader strategies. You get access to the market scans on Stockscores, email support from me, 6 months access to Stockscores, renewable at $300 a year, plus those proprietary real-time indicators for TradeStation. In addition, the live training with Tyler. So once or twice a year, I've been putting on live training. Now, I used to teach classes in a university, in Toronto, Calgary, Vancouver, Edmonton a few times, Montreal. So I used to come into a city, teach a class. Well, as time passed, I get more and more busy. I've got 3 kids. I trade a lot. So I stopped doing the live training in person, and I started doing it online. Nice thing about that is I could teach people all over the world. So we now have students all over the place. And I'm going to be doing one of those live training weeks. It's about a week of training coming up in November. And the real benefit is that, well, there's 2 benefits. One, when you take the live training, you're kind of forced to learn it. You're set up for a class on Saturday morning from 9 till 12. I'm going to take you through all the foundation material. There's no procrastination. You got to do it. You have questions, you ask. I answer them as it happens. It's recorded. That class is recorded, so you can go back and watch it 100 times if you want. Then where I think the big benefit comes in is I actually apply what I teach. So Monday to Thursday, November 30th till December 3rd in the evening, I will do the investor market scanning process, and we will evaluate charts together to determine if they meet the rules. All right, so there's no benefit of hindsight. I'm going to actually try to pick some winners for you. But more importantly, I'm going to show you how I analyze things as it happens. And then for those who like to day and swing trade, I will actually trade live with real money, showing you exactly what I buy and sell. You will watch my screen for the day. Well, it's actually for the first 2 hours of the day, although I may stretch that out if it's a good day. But count on it being the first 2 hours of the trading day, Monday to Friday, possibly longer. And again, it's going to be recorded. So if you can't watch every day, you can watch the video after the fact. If you feel, I go through things pretty quickly because the market's open, I'm trading. So if you feel like I went through something too fast, you can go back and watch it 100 times and really slow it down to understand, hear every word that I said. That's a super valuable way to learn, I think. And so this live training is coming up at the end of November, starting Saturday, November 28th. Anyone that registers for my investor or active trader course before November 26th, so that's coming up next week. What is that, Thursday? I think Thursday next week. You will get that live training for free. So normally when I do live training, the whole course costs $500 more than what I'm going to show you in a moment. But I've kept the price lower by $500, and I've thrown in the live training for free. So if you buy the investor course, then you're going to do the foundation and the investor market scanning. If you buy the active trader course, you're going to do the foundation on Saturday, the investor if you want through the week, plus the live day and swing trading. And that'll all be done right there. All right, so what does it cost? The foundation course, $995. Investor course, which gets you the live training as well, $2,495. The active trader course, $3,495. If you buy the investor course and you want to upgrade in the future to the active trader course, you pay the price difference plus $250. So there's a $1,250 upgrade fee, and you could just upgrade online. You just log into Stockscores and it's all set up there for you to upgrade. All right, so I've got a few questions coming in. What I'm going to do now, before I show you my trades for today, is I'm going to throw up a poll, just for those that want an email follow-up. And I know from last week I still haven't emailed the follow-up yet, so I will be doing that probably tomorrow or the next day. Actually, I might wait till after Thursday. But anyway, I will send out an email with some pages where you can go and register for the class, although you can do that anyway. But anyway, if you want an email from me with some details about the Active Trader course or the Investor course, just say so into this poll, and the system will, it knows your email address because you logged into the webinar, and I'll make sure you get that email. If you don't want an email from me, no problem. I just won't send you one. Just say no. And while that is up, I'll answer some questions because I notice that there's a few coming in here. So, and I'm sort of paying attention to some of these. So do I consider Fibonacci or Elliott when looking for signals? No, I do not. I'm aware of those concepts, but I don't use them in my strategies. What is the time frame? I'm not sure if I understand what you mean, but I day trade with a 2-minute time frame for the most part, sometimes one, but very rarely. And I swing trade with either a 13-minute and a daily or a 30-minute and a daily. Could you show how you develop the risk-reward chart? Hopefully I showed you how I plot those lines using Stockscores. That's what I meant to do. What is the blue dot? The blue dot is my wave up dot. And I know, Rick, I just sent you my indicators today. Rick's one of my students, so I may not have sent that to you. If you could just send me a reminder email. I'm not sure if that was in the bundle I sent you, and I can send along that one because that's a new indicator that I just gave out last week. How do I do the risk reward lines in TradeStation? So that's something you have to program with the Fibonacci tool. I've got a video on that. Are you using the 30-minute time frame for all swing trades? Not necessarily. Sometimes I use the 13-minute, but usually it's the 13 or 30 and the daily. So I use both of those. Do I trade these with options? I get option questions a lot. I personally don't. I've got enough cash where I don't need the leverage of options. And the downside of options is that there's a third dimension, which is time value. It doesn't matter too much when you're day trading. But the other issue is liquidity. The spread between the bid and the ask on an option is going to be wider than on a stock. Having said that, I actually went through the stocks that I traded today, and most of them are very actively traded stocks, so they have options written on them. And they all had, it would have been easy to actually make as much money as I made today, probably more, using the options without putting up so much capital. Because you'll see in a moment, I bought, well, we'll show you in a minute, but I bought, say, 3,000 shares of the VXX, so that's $150,000. Well, you could have done that option trade with $5,000 and probably made the same profit. So certainly you can do what I do with that particular day trading strategy using options. I personally don't, but I did a little research on that today, and I'm pretty sure it would be fine to use options with that. Just understand that's not something I do. Many of my students do it though. Now Italo is asking of more information about how I move the stop up as price moves up, but that's a little more in depth than I want to get into tonight. That's something that I reserve for the classes that I teach. So if you get the Active Trader course, do you get the Investor and Foundation as well? Yes, you do. Is it compatible with Thinkorswim? My indicators are not compatible with Thinkorswim. Now my mom is on this. My mom is on this webinar tonight. She's just reminding me that she taught me how to use a spoon. Yes, thank you, Mom. I appreciate the reminder. So what's this question here? How do you analyze multiple time frames? So one of the things you can do in Stockscores. So this question is about time frame analysis. I'm going to take the poll down just so I can, and thanks for answering that if you did. And let me just close that up. And you should see my screen in a second here again. So there we go. When I talk about time frame analysis, and I did a webinar on this a while ago, but not everyone saw that. It's probably on YouTube as well. So if I pull up a chart, I like to look at things in multiple time frames. So if I'm position trading, I will look at a 3-year weekly and a daily chart. And so here on the 3-year weekly, I might say, okay, there was a breakout right here, and then I would check the daily and see, does it have the right pattern that I want to see on the daily. As a general rule, I use the longer term time frame, so in this case it would be the weekly, to tell me what to do, and I use the shorter term time frame to tell me when to do it. So I'll say that again. The longer term time frame tells me what to do, and the shorter term time frame tells me when to do it. So if I'm swing trading, I will often look at the daily chart. It tells me what to do, but I look at the the 13-minute chart to tell me actually when to enter the trade. So that's a quick answer. Hopefully it gets a little bit at your question on how I use multiple time frame analysis. Curious, are you using the 30-minute time frame for swing trading now instead of 30-minute? Not necessarily, it just depends on how I want to trade it. The 30 and the 13 are both valid for the particular strategy that I have called the simple swing, but it's a matter of market conditions and when I have the time to do it. So when I trade live at the end of the month for everyone, I'll do both. I'll do lots of different things. I won't worry so much about making money trading. I'm going to try, but I'm going to be more focused on teaching. I'll probably miss lots of trades, but walk you through the process and explain things as I go along, answer questions, and you'll see why I do something sometimes and why I do other things another time. I also took SYF as a day trade today because it was trading abnormally, but when it became a loser, I realized that the daily chart pattern was not good. So the daily is good or important. I also did SYF and I lost that, and we'll take a look at that in a minute. Maybe I missed something on that one with this. Next question, are the prices for the courses in Canadian or US dollars? They are in Canadian dollars. So if you're an American or if you use US dollars, you're at quite an advantage because there's about a 30-35% spread there. And that's pretty handy. If you can't take, the next question is, if you can't do this class, when will your next one be? So I'm not certain that there will be a next one. I am slowly working towards retiring from doing the live teaching. I actually had someone ask me this question today by email. So it's not that I'm going to stop taking care of my customers or Stockscores is going to disappear. That's not it at all. I'm just teaching less and less because my trading is becoming a bigger and bigger business on its own, and it requires more of my time and focus. So, when I teach, it's distracting to my actual trading. When I do a week of live trading, I don't make as much money as I would if I didn't have anybody watching it, if I didn't have to explain everything I did, because I can obviously work a lot faster if I'm not having to explain it. So I wasn't going to teach this November. Normally I teach in November and in May, and I taught last, I guess it was April actually, and I wasn't going to teach this November, but I had a bunch of people, who were waiting for me to teach another class, so I said, okay, I'm going to do another one, but don't assume that I'm going to do another one. Not to say that I won't, but I don't want you to expect that I will do one again in May, because as I said, I'm not sure that I will be doing another one. So it's unsure. So if you want to learn it from me in person with the live bonus training, then if you don't want to be disappointed, I would do the course now. It's possible I'll do it again. The online learning will be there forever. Well, I don't know forever, but it'll be there for a long time. It's been there for 15 years, so I have no intention of taking that down. But and I'm not saying Stockscores is not going to continue to evolve. I want to free up some of my time, so I'm going to be teaching less and less going forward. Next question, how many screens do you use? So when I'm at home, I use 8 screens. If you actually go onto Twitter and go way back, I actually posted a picture on Twitter. My Twitter feed is at Stockscores, and you can actually see my screen setup. Right now, I'm spending the winter in Hawaii, so I don't have my normal setup. I have a fold-up table that I bought at Costco. I have a big like a big Apple screen, Apple Cinema display, and my laptop screen. So I only have 2 screens right now. I can trade just as effectively with these 2 screens and a fold-up table from Costco as I can when I have my normal setup, which is a big fancy desk with 8 screens on it and a second computer with another 2 screens. So the nice thing about having multiple screens is it makes me a little bit more efficient. I can be a little more lazy because I can put a lot more in front of me. But hey, when I'm traveling, I have my little 2 screens set up here, and that's how I'm trading right now because, as I said, I'm in Maui for the winter. So, okay, next question. What time frame are you typically using to sell your swing trades? Well, it depends on my entry. So if I enter on the 13, I exit on the 13. If I enter on the 30, then I exit on the 30. I don't have access to 13-minute charts. Would a 10 or 15 do? I would go toward the 15. So not every charting program can do 13-minute charts. It's something that's kind of cool about TradeStation. You can do that. There's not a big difference. So just do the 15-minute. Is the Mindless Investor book similar to the book titled, let's try to read the rest of the question, Perspectives on the Stock Market? No, it's Perspectives on the Stock Market. That's an old book. That's I haven't heard that one come up for a while, but no, I wouldn't say it's not similar. It's written by me. Both books were written by me, but Mindless Investor is a lot more in-depth than the Perspectives book. Is the Stockscores market scanner up to the minute? No, it is delayed about 30 minutes. So it's not suitable for day trading. It's useful for swing trading. It's useful for position trading. But for day trading, we got to have a real-time feed. And so I use TradeStation, but there's other programs out there, TC2000, eSignal. What's another one? Oh, there's lots of them. But my indicators were written for TradeStation, so that's probably the best one. So Rick, just send me an email and I'll remind me to send you the wave indicator. I think I forgot to do that. Are there any benefits being a Desjardins client? No longer. They're not offering our courses anymore, so that promotion is over. Next question. It sounds like I prefer the TradeStation platform for your trades. Can we work the system on other platforms or will be best served on TradeStation? Hey, you can use other platforms. I have students that use TC2000. It's probably the most common one. But for what you spend on TradeStation, it's $300 a month. I mean, it's not meaningless. For what you spend on TradeStation, I think you will save yourself more than enough time and make more money using TradeStation than you would if you didn't have it. So I think when you're learning, because it's $300 a month, maybe I wouldn't use TradeStation through the learning process. But once you've learned how the strategies work and that sort of thing, I strongly recommend, if you're going to day trade, that you use TradeStation. It's not necessary, though. I have lots of students who don't use it. Do I look at any oscillators, indicators in your final decision? No, I do not. I do not actually use any common indicators. I only do my own. So all of my strategies revolve around my proprietary indicators. Remember at the top of the presentation, I said if you do what everyone else is doing, you will be average. I'm not big on doing what everyone else is doing. I want to use my own stuff. So, and not too many people in the world have those indicators. I haven't taught that many people. Bob is asking, okay, 8 screens, how many computers? That's all on one computer. So you can get computers that will run multiple monitors using special video cards. And I get mine from Vulcan Trading Computers. But there's different places you have to go there. Can we just do the online teaching without buying the course? No, but if you've taken the course before, like you're saying you took the course 5 years ago, you can do a repeat of the course for $195. So I did send out an email to all of my past students last week with instructions on how they can redo the online or the live training next week. Having said that, spam filters will often block those emails. So if you are one of my students from the past, I don't care if it's 10 years ago or 2 months ago, and you want to do the live training coming up at the end of the month, you can do that for $195. If you did not get the email, send me an email tonight, tomorrow, and I will resend it to you. I'll resend you the instructions because it probably ended up in a junk folder or something, a spam folder, and unfortunately that's just the way the world works these days. Does TradeStation cover Canadian stocks? Unfortunately, no. And they've been promising me for 7 years that they're going to add Canadian markets, but it still hasn't happened. Does the foundation course include the live trading? No, it does not. You have to do the investor or the active trader course. Can you use a TradeStation account to trade while you're in Hawaii, or do you have to be a full-time resident? Well, Canadians can't open accounts with U.S. brokers. You have to be a resident in the U.S., is my understanding, to open a brokerage account. So in theory, I have an address here. Maybe I could open an account with TradeStation. I haven't looked at it. I have a home here, and I just haven't looked into it. Maybe I should. So I don't really know the answer to that question, Scott, but I might take a look. Where can I register in November 30th, December 4th webinar or seminar? So if you would like to register for the class, there is the address you go to, stockscores.com/learn. On that page, there are some videos explaining how the courses work, and there's also the, you can actually sign up for the class right then and there. If you have questions for me, email me. I mean, if you want to ask a little more information about the class coming up, just email me. I'm happy. All those emails go to me. I don't have minions who look after that stuff. I do it myself. So there's my email address on screen, tylerb@stockscores.com. And I'm happy to answer any questions you have to help you decide whether you want to take the course. I don't do high pressure sales. I'm not going to bug you. So whether you take my course or not, that's up to you. And I don't push it all. Yes, Stacy, one of my very first students, Stacy, I won't say your last name, but yes, you can redo the course as a returning student. She probably took my course 15 years ago, and yeah, for $195, you can redo the live training. I just opened a Disnat account. Do I qualify for any Stockscores training? No, the Disnat promotion is no longer in effect. So unfortunately, that doesn't help you anymore. Do I think that with due diligence and hard work, the information in the basic course, a student can be a successful trader? Yeah. I teach you everything that I know. So will you be successful? Well, it depends how hard you work, and it depends how disciplined you are. It's kind of like buying a gym membership. If you go to the gym every day and you work out and exercise, you'll get fit. But if you buy a gym membership and you never go to the gym, and you don't do the work, you're not going to be any better off. So one of the reasons I charge $3,500 or $2,500 for my course is because it's some powerful incentive to do the work. And if you do the work, my mom's on here. She's done the work. She went through all my videos. She read all my things, and she trades the market. And she tells me she's doing well. So that's great. Am I not trading Canadian stocks? I trade Canadian stocks. I just don't necessarily day trade Canadian stocks because I don't find them liquid enough. But when there's opportunities in Canada, right now the Canadian market's not in great shape. Most of the sectors in Canada are in downward trends. So I love to trade the Canadian market when it is hot. If you go back 3 years when the Canadian market was hot and the miners were rocking and the energy stocks were just on a rampage, awesome market to trade. Way easier than trading the U.S. market because it's less competitive. However, when the Canadian market's dead, it's dead. So I will trade the Canadian market when it's hot, but I don't do it when it's not. And right now, it's not really a good market to trade. But that can change. That could change in 2 months, and it'd be red hot again. It's this very cyclical market. All right. So can you trade U.S. stocks in a TFSA? I believe you can. I'm not an expert, so I'm not certain, but I'm pretty sure you can. It used to be that you couldn't, but I think they lifted that restriction on registered accounts that you couldn't trade in them. So, yeah, I'm not positive about how that works. Yeah, I'm just one of you is saying that you do trade Canadian stocks. So, all right. So I think that's all the questions. If I miss your question, you can fire me off an email. And you can see my information on the screen. I will have an email going out to everyone that requested me send them an email with information about the class. Remember, I have another webinar on Thursday, another webinar the following Tuesday. Those are the last 2 webinars. The deadline to take advantage of the special, I was going to go through my trades today. I forgot about this. Sorry. Here, I've been spending all this time answering questions. I forgot to go through my trades. So we'll quickly do that. What time is it here? Well, we're a little over time, but what the heck. Okay, so I'll go through these real quick. So Bank of America, I shorted. I lost money. So let's do that one first. So there's the Bank of America chart. Should see it now. And I shorted Bank of America right here. It was on my wave strategy. You can see the little yellow dot there. And I got stopped out. So that was the first trade I did today, and it didn't work. The next one, let's do Cisco. So Cisco I also shorted, and I chickened out on Cisco. So I shorted it right here. There's the yellow dot, but I shorted it a few candles later. And I chickened out on it when it started to come back up again. I decided to just take the money. I didn't take the money. Basically I broke even. I made, you can see here, I made $10.50. So after commissions, I made 50 cents. I think I shorted, how many shares did I short? No, I actually lost $10 after commission. So not a great trade there. SSO. So SSO is an ETF that goes up with the S&P 500. It's a leveraged ETF. So it goes up twice as fast as the S&P goes up. So I bought it right here. There's a blue dot. Okay, but again, I have to wait for a certain pattern to form. The pattern took a few more candles. So I bought SSO there, and I actually sold it early. I didn't wait for a sell signal. I think I sold it right about there, so pretty close to the high, and made about 2 to 1. So I was using about $400 or $500 of risk per trade today. That's less than I normally use, but I couldn't trade all day. I had committed to reading a story to my son's preschool class, so I had to rush off before the market closed to read a book called The Ugly Pumpkin, which is a great little book if you have kids. I highly recommend it. It's all about Thanksgiving. So anyway, reading that book probably cost me $1,000, but it was well worth it. SYF. Let's take a look at that one. So SYF is a stock I bought. This was more a different strategy called an intraday pullback play because the stock was abnormal this morning, and that didn't work. Stopped out right there. Under Armour, I shorted. I shorted right here. I kind of got bored of Under Armour. It just wasn't going anywhere. The market was going down, and it wasn't really following along. So given that it had gapped down, I just got bored with it, and I covered my short. I lost $64. VXX. So VXX tends to go up when the market goes down, and I bought VXX right here, and I got stopped out there for a 2 RR profit, and then I had to go read the story. It's too bad because it actually gave me another good entry signal here. There's, see that blue dot there? And I didn't take that trade. So, but that one made another 2 or 3 risk reward right there. Went up. So that one would have made 3 using my rules. I'm quickly analyzing the chart, and I can determine where the exits are. Walmart. So Walmart was one of my first trades today. I bought it. I bought it right here. And this was on my intraday pullback play strategy. So remember I said earlier Walmart was abnormal, made a big gap up, and I sold it for 2 to 1, or just under 2 to 1. It started to roll over, and I could see the market was starting to roll over. I thought maybe the market was going to get weak. That's exactly what happened. And so I sold that one. And finally XLE, which is an ETF that is based on the US energy sector. I bought it right here. There's the blue dot. And made a small profit on this one. It didn't work out great, and I wasn't feeling confident about it, so I dumped it for a $240 gain. So all said and done, I mean, not a great day. I made about 3.5 times risk after commissions, maybe even closer to 3 times risk. But still, $1,700 is better than a kick in the head. And that's it. So, whoops. That is my presentation for tonight. I'll just leave those details up there. There's my email address. Follow me on Twitter. I want to get to 1,000 Twitter followers before the end of the year, so tell your friends, retweet my tweets. I post, many times I'll post the actual trades that I do on a day, so if you're not on Twitter, get on it. It's actually a cool, it's probably my favorite social media app. I'm not on Facebook or anything, but I love Twitter. It's very cool. And help me get towards 1,000 Twitter followers. YouTube channel, Stockscores.com. You can see that there. Any questions for me, email me, tylerb@stockscores.com. If I missed your questions, sorry, and I'll get back to it. Just email them to me, and I can answer your questions that way. Have a great night, everyone, and trade well.